Good morning, everyone. On Wednesday, the stock market had kind of a rough go of it. As you're looking here at the Russell 2000, this is really the index I'm going to focus on the most. I know that isn't the best uptrend line drawn on the Russell 2000, but you get the picture of it overall following the red line up. We cracked it quite hard on Wednesday, and Wednesday the volume in the Russell 2000 was heavier than the day before, giving it a technical distribution day. However, volume on the Russell 2000, even though you can't see it here, I've already checked it on MarketSmith, was still below average, and that confirms IWM, which you can see the same uptrend line that I drew. You can see that it had higher volume the day before also, but you can see it's below average, and that's confirmed on the inverse ETF side of RWN, and then even going harder with TWM, which is more of a leverage position, an ultra short. You can see also volume well below average. And if we go around the market, you can see the NASDAQ 100, the NASDAQ was only up today because of Apple. If it wasn't for Apple, the NASDAQ would have probably more than likely have given a technical distribution day. Also, you can see another poor thing is that the market has opened strong and closed weak in back-to-back days for the NASDAQ, kind of like spinning around and not going anywhere, almost like churning action. Then you look at the SPY, you look at the DIA, the diamond, you can see volume well below average. The SDOW, the SRTY, volume below average. And so this goes on and on and on. You can see the New York Stock Exchange, volume below average. The S&P 500, volume below average. TQQQ, volume below average. Dow Jones Industrial averaged, volume below average. So volume's just below average everywhere. Still at the same point, it's bad, but the below average volume, while that's not, that negative, nothing can say that in this market, in a QE market, we can't start selling off on lighter volume. And who knows, that might be a worse sell-off than all these heavy volume reversals that we get. Because as we know, when distribution days start piling up, that means that a market's about ready to reverse. So maybe selling off on lighter volume might be a more bearish situation. However, what can we confirm to see how bad it is? Well, how are our holdings doing? On that end, they're doing fine. However, Caterpillar gave a 50% sell by closing below the 50-day moving average. We still have gains, so it's not a full sell yet. If it closes below the lows of the June and July area right here, that will go ahead and be a full sell for it, because Caterpillar from this move off the lows when we went long should be performing much better than what it is right now. But they warned about worldwide growth slowdown, so what are you going to do? Chewy continues to sell off, showing extremely weak relative strength compared to the market. This sell-off was not on huge volume, so it's not a 100% sell. It's a 50% sell because it's above average. And I'll give it some wiggle room, but if it doesn't find support here, it's going to be really hard to hold it to the 200-day moving average if we start to sell off. Remember, that's how I got shaken out of VIPS, which I'm now long again, but really wishing that stock wouldn't have shaken me out. And that's how I got shaken out of HIMX, which is currently one of my favorite technical patterns besides PERI. As you can see, PERI is right now building a beautiful cup with handle pattern. Not a perfect cup with handle pattern, because technically that handle is a little low. And to be honest with you, it's very low. And let's just really quick just see how far away that handle is. It's not that bad. You know what? It's not that bad at all. So, I'm exaggerating once again, but to my eye, it seems low on this chart. I would personally like to see this handle being built above the 50-day moving average. So what are you going to do? So really, HIMX, that's my favorite chart out there right now. And as you can see, beautiful setup. So what stocks are really weak? Well, BWEN is a full sell. Not surprised there. That was only put into the risk account. RCPT has failed. Once again, not surprised there. That's why it only went into the risk account. However, TA failed. That's a little surprising. I would not have thought the TA would have failed that very nice technical pattern that we had going there, considering the turnaround and the earnings and sales in this company and the previous accumulation off the January lows right before it broke out all the way up to the April highs, the low volume in the base, the retaking over the right side of the base on heavy volume. I just did not see the past two sessions happening. Yesterday was fine, but that being culminated by today's session, hence a 2-day chart now looks like this, and this is what it looks like on an arithmetic chart. Like I said, Little shocking. So TA is kind of like the first like uh-oh sign, but besides that, those are the only three partial sells or full sells to go along with Chewy and Cat as partial sells. So it's not that bad out there. We don't have any new longs. We don't have any new shorts. However, after hours, Facebook is up 16% last time I checked. FF5E's up 8%, and Baidu's up 13%. We have a chat room member who nailed the Baidu calls and straddles, and also nailed Facebook calls by getting long calls before the earnings. He would have normally we straddle these plays, but he went all outright long the calls on Facebook and was rewarded greatly after hours. So congratulations to that member. And you would think, though, that the strength of Facebook being up 16% and the strength of Baidu being up 13%, that after hours the market would be showing strength, but sadly enough, it's kind of flat going into the morning, and that probably indicates a little bit of weakness still overhanging this market. So it's going to be a rough earnings season, but if I can keep seeing more of these HIMX type chart patterns, I'll be a happy camper.